market already, I think, had expected that this deal would be done in some form. But when you think about a loss of demand of 20 or 30 million barrels per day in April, probably something similar in May, then cutting 7.5 million barrels, or if you throw in the cuts from, let's say, the US and so on that are forced to cut, cuts of 10 million barrels or so, okay, it helps the market to some extent, but not much in face of so much demand destruction. And that's a bit of hypocrisy because, of course, the country increasing oil production most over the past 3 to 4 years has been the US, not Saudi Arabia or Russia. But nevertheless, of course, the US has a lot of political weight in this, and their complaints, I think, were encouraging the Saudis to do a deal that probably the Saudis were ready to do anyway. I think in the short term, it doesn't make too much difference. Probably what's important is longer term, when the world economy starts recovering and national economies start ending their lockdown and people get out driving and flying again, demand will probably still be well down on where it was last year, but recovering. And then this enables OPEC to have a little bit more of a controlled glide into returning to higher demand. I think the market is still not reflecting the reality of what's going on in physical crude supply and demand. So we have major parts of the world still shut down. Okay, there's hope of reopening the economy in some European countries or in the US. That's likely still be a very limited reopening. There'll be a lot of economic damage in these countries, unemployment, bankrupt companies and so on, which will affect demand even if the virus itself is largely overcome.